Ladies and gentlemen, welcome back to Data Dispatch. I hope everybody is having a wonderful day. First things first, sorry for the delay in videos. I've been very busy with life, but it's great to be back creating content for you guys. I missed all of you talking about Palantir, the market. We're at some very interesting times right now, especially at these all-time highs for the market. And we have some big geopolitical meetings that are occurring. On top of that, you have Jackson Hole that's coming up here and what the Fed's going to be doing regarding interest rates, and we have Palantir that's kind of experiencing a pullback right now, so we're going to be talking about that price action, of course, and some interesting short positions that are being publicly announced here, and just trying to digest it all, looking at some of the other stocks that we've been keeping on the radar. So if you're a new or returning viewer, hit that like button, subscribe for daily videos, and let's pop it up on the screen here. Now, Palantir is at 174 right now as we speak. Palantir did a good job kind of consolidating here as we saw its pop. We know after earnings, when it was here in the 150s consolidating for a while, gapped up here, had this run up to these all-time highs of about 190 and is now pulling back. Palantir has pulled back about 10% right now, which actually, you know, in this short term here, and for people that start going very bearish on Palantir, I mean, just zoom out. Yes, it's at a high valuation, but these corrections are very healthy in terms of price action, especially for these stocks that are very highly valued. So Palantir is at a very interesting point. It's sitting at about 174 right now, and where you can see right here is right at the support level. Will Palantir have a reversal here? It's possible, depending on how the market's going to react, the macroeconomic environment, or could it come back down here to the 150s? I think both of those are both, you know, incredibly high opportunities for both chances in terms of whatever your long-term perspective is, your short terms, you know, just zoom out. Palantir has been a runner, so in terms of its cooling off a little bit, that is completely fine with me. Currently in the overnight hour, sitting at 172.93. So we'll see if we do get a reversal or if it'll continue to come down. If it does lose that 170 kind of support area, that's where you can see it coming down here quicker to about the high 150s or low 160s, in my opinion. Now, looking at that, why Palantir is starting to get, and we've seen this before, when all of a sudden you start to get this whole kind of conglomerate of bearish articles. Citron's research has a cautious mention on Palantir. And basically what they do is, you know, they're following up these comments from Sam Altman from OpenAI, who basically stated that AI market is in a bubble. And this assessment from the leader is now valued at $500 billion. That's what the private valuation of OpenAI currently is. And basically what Citron did a direct comparison of, kind of comparing Palantir to OpenAI, noting that if Palantir were to trade at 17x price to revenue multiple, that's what OpenAI trades at right now, this would be about a stock price of about $40 per share. Now, I don't know if you can directly compare OpenAI and Palantir, basically, but that's what Citron is doing, looking at just a direct comparison in terms of price to revenue multiples at that 17x, and that's where they get their $40. But you know, you're seeing this being casted all around on X, on just, you know, legacy media. So in terms of these short positions, I mean, Palantir, I don't think, unless there was some huge drastic changes in the company, is coming down to $40. That would be quite crazy. Nonetheless, though, this does cause a lot of fear, uncertainty, and doubt across the board. And that's where you're going to see traders that kind of hop on short short positions, trying to take advantage of this fear that's coming into the market, trying to pull Palantir kind of down a little bit. We'll see what happens, though. In terms of the market in general, where futures are sitting down a little bit here, and we had tight consolidation today. 642.89 is where the SPY hangs out right now. But in terms of the general market, the broader indexes, the S&P 500 basically closed at a dead even, down 0.0%. So it's sitting right here at 64.49. And the big question is, you know, I think we're going to see a lot of consolidation. We'll be talking about this heading up to Jackson Hole, which, you know, unfortunately would be consolidation this whole week. We just didn't have a ton of price action today. Right now, the stock futures are flat. And as we're awaiting what the Fed's going to be doing regarding Jerome Powell's decision, what's going to be, you know, in terms of the central bank's remaining policy meetings this year, that is a big concern that's on the radar. Right now, a lot of the market is expecting the Federal Reserve to at least use Jackson Hole as an opportunity to prepare the markets and signal towards a 25 basis point cut in September and potentially accommodating stance throughout the year's end. one big thing here, kind of with the grain of salt to take, is, the Fed's future market that's predicting about an 83% chance right now for a quarter or 25 basis point rate cut. If for some reason rates are to hold steady, if Powell is going to hold out, which I don't know. I don't know at this point. If Powell is going to hold out and not cut by 25 basis points, we've had a lot of pressure. That is where we could see the market that would react, I think, more of a negative manner. The market really wants to see this 25 basis point cut. If they do, I think the market will react positively. In terms of some corporate earnings that we do have, some of the big box stores, we have Home Depot, Lowe's, Walmart, Target, so some big corporate retailers that are going to be reporting their earnings, so we'll be keeping our eyeballs on that. In terms of quarter two, S&P 500 earnings, a lot of companies have been doing very well in terms of the majority of them are exceeding expectations. And I think that's why we're seeing a lot of resiliency in the market, is because what we're seeing in terms of actuality is the economy still doing relatively well. Yes, last week we had some contradicting data with the CPI and PPI that came in, and now that's kind of leaving us, okay, what's the Fed going to do at Jackson Hole? Other than that, we have SoftBank here. It's investing $2 billion into Intel. It's kind of a big thing, as Intel has been beaten down, as we know, in terms of their performance as a company. And also, right now, we have Trump and Zelenskyy from Ukraine that are coming together. We see a meeting today, and we see the announcement of this $100 billion deal in terms of purchasing weapons. And of course, you're going to have that security guarantee that comes with that. And now, after the White House, talks about these talks with Ukraine, Trump says now he plans to set up I always get caught up on his name, Zelenskyy and Putin meeting. So we'll see if this happens. Then the question is, is there going to be a ceasefire on the table? And if that can be negotiated, that could be another bullish catalyst for the market. I think the market would positively react to that if we do see a ceasefire, because that's been kind of on standby for a while. And the last time Zelenskyy came, we know there was kind of a falling out, and there's a ton of memes that got created off of that. So this meeting was much more, it looks productive and was more of a negotiated type meeting, and it seemed pretty friendly. So that can lead them into the right direction, hopefully leading to a ceasefire. Of course, just in terms of not just the markets, it'd be good not to be in these huge geopolitical tensions and not to see people, unfortunately, being affected. In terms of the other stocks that we have been covering, let's take a look at some of those. We have basically some of these stocks pulling back a little bit, consolidating, and kind of waiting to see how the market's going to react. Market, like I said, we could get a push to 6,500. In terms of the odds that are against the market in terms of a bullish direction, you do have the seasonality to kind of weigh out, and that's where the market's kind of consolidating right now. If it were to pull back about 5%, I wouldn't be incredibly surprised either. But nonetheless, I'm still staying very bullish for the long term and in terms of the end of the year. Just looking here, Apple has made a good pop-up, as we know. Kind of been hanging out here at 230 now, doing pretty well. Tesla getting out of that low 300 zone and kind of having a breakout here to this 335. Also a very interesting spot for Tesla. ASTS, another big one that's been on my radar, has really been testing this 50-day moving average, all right here at the 447. And you can see it's been holding a lot of support. ASTS, I think if we possibly could get some positive price action in here, a push back to over 50, that's where you could possibly see this run up back to 60. Nebius, we've been talking about before. We saw their earnings. Wow, what a breakout when it was consolidating here in the 50s, back up to the 70s. In terms of Oklo, also cooling off a little bit here. So kind of the general, what you're seeing here, the general pattern, a lot of these stocks just cooling off. A lot of these big ones that have ran pretty well over the last 3 months. So deserving to have a little bit of a cool off here. UNH, of course, you saw with the Warren Buffett announcement of the investment right here, popping that up, back up above 300 here. This could have some positive momentum if it holds above 300 in terms of more of a value-oriented stock, not a huge, this is more of what's been happening with UNH kind of in the healthcare sector. Google hanging around 200, and one interesting one that I've been keeping on my radar is CoreWeave. CoreWeave has had a decent amount of support at the $100 level. As you guys know, CoreWeave is building kind of like Nebius, but CoreWeave is more US-based, building to work on AI full-stack infrastructure in terms of cloud computing. sitting right here at around that $100 support level. You know, CoreWeave has had a decent amount of support there and has had a good reversal at this 148. And then, of course, earnings kind of brought CoreWeave down here to about this 96. So could this have a reversal? That could be an interesting play to the flip. Or is there more of a breakdown of the stock we'll be keeping on our radar? Hood continuing to do very well. Hood has so much resiliency in terms of a fintech company. I mean, well, there's not much more to say about that. And looking at Tempest has been breaking out right here. So a lot of the stocks we've been talking about either cooling off or doing quite well still in terms of this consolidation period that we're seeing in the market. It's good to be back. Peace out, take care, and I'll catch you guys later.